any further ado, we will be beginning with the webinar. Very good evening, everyone. My name is Mahima Lal, and I am the part of the engagement marketing team at HeroWire, and I'll be your host for today. So, everyone, before we start with this webinar, a quick introduction about this platform, HeroWire. So, HeroWire is a premium learn tech company, which is a part of the larger Hero Group. It is on a mission to not only reimagine the way people learn, but also to build a better and a brighter future for themselves. We are mainly on a mission to not only reimagine the people learn and also equip them with the right skill set, the right knowledge, and the expertise that they need in order to find success. So today, as you all can see, we are presenting a webinar on the topic crunch numbers like a pro, the ultimate financial analysis webinar. So in order to present this webinar, we have Mr. Lalit Falara with us. So a quick introduction about Lalit. So Lalit is a CFA chartered holder. He has completed his LLB from Pune University and a graduate in commerce from Delhi University with a total of 15 plus years of experience. He has worked for projects across assurance, business advisory, anti-money laundering, and transaction advisory. Very warm welcome, Lalit.
Hello, thank you.
With Lalit, we also have Prateek Sharma here. So Prateek has 10 plus years of experience in finance industry. He has worked in consultancy roles in companies like EY and Deloitte and have catered clients like Nokia and Microsoft. Currently, Prateek is working as a subject matter expert for our programs related to finance. Very warm welcome, Prateek.
Thanks, Mahima.
So everyone, as you all know, we are in a webinar setup and you won't be able to switch on your cameras and your mics, but you still have a Q&A section and a chat box open for you all. So if in case you have any questions or any queries regarding this webinar or the topic that we are presenting, please feel free to put down your questions in the chat box or in the Q&A section. And Lalit and Prateek are here in order to help you out with all your queries. So without any further ado, over to you, Lalit. You can present your screen.
Thank you, Mahima. Yeah, I'll do that. I'm just trying to just give me a second here. Okay, that's okay. We are not going to use PPTs anyhow. So first of all, good evening, everyone. I see a good 50 odd crowd here. So thank you so much for taking your time on a weekday. The idea of the webinar, I mean, the number crunching probably does not do justice to what we are gonna do together today. So I'll not make it a monologue. I'll make sure that you also have something to contribute and something to take away from this particular session. And the webinar is to actually give you something very concrete, also to demonstrate the learning philosophy and the learning pedagogy we follow here at Wired, which is basically giving you the same exposure as someone in EY or someone in JP Morgan or someone in Goldman Sachs would get, right? While you are still a part of the classroom. Okay. So we tend to keep an eye on things that are happening around us, like the GoS bankruptcy or the Bed Bath and Beyond that fell down, or the SVB, the Silicon Valley Bank, or what exactly Apple, Tim Cook and Luca Maestri, who are the CEOs and CFO of Apple respectively, had to say on their second quarter performance. So that's a demonstration of our learning philosophy, learning pedagogy, as well as the teaching methodology, right? So in this context, let me quickly take you to a little something. So I think you're not able to see the entire thing. You're just able to see one part of my screen, right? But that should work. And let's quickly jump to what I have in store for you guys. And let's start with a question, just like any other webinar that I start. Let's start with a question. Okay, let's say you're working in EY, you're working in GS, you're working in Goldman Sachs or JP, you're working in Barclays, anywhere, like any firm which is a financial services firm or a financial institution, right? Now, I also understand that some of you would have worked in finance, some of you had some experience working in finance in some capacity or the other, and you have been introduced to the term called financial analysis or financial performance analysis, right? So if I ask you this, and this is open for everyone, so we'll do it hands-on, right? And we'll take comments and we'll discuss rather than just hearing me out, because that could probably get boring. If I ask you, how would you analyze the financial performance of Apple? your partner at EY or your boss at Barclays asks you, okay, tell me or comment on the financial performance of Apple, right? Let's say just the last financial year, which ended on September 24th, 2022. So the question is there a way to structure our thought? Is there a logical and a structured approach to complete or to perform a comprehensive financial analysis? So my question is, how would you go about that? Where would you start, right? What would you look at and where would you end, right? And in order to give you a perspective about that also, let me also give you something. Let me send you the direct link, right? So this is SEC's website, Securities and Exchange Commission, which is the watchdog of, just like SEBI in India is a watchdog for the securities market in the US. And here you have the annual report for Apple for the year 2022. I'm going to put that in the chat box. You can just click on it. This page will open. Okay. And well, I do have a law degree, so I'm not an advocate. I'm not a part of the bar for some reasons, of course, but I'm a lawyer. Yeah. So here you have the entire annual report. You can read it later. I think it could be an interesting read for a company like Apple, which has just opened 2 stores in India and created a lot of buzz, right? And if you go to item 8 directly, you will find the financial statements, right? Consolidated statement of operations, that is your income statement. After that, you will have your statement of comprehensive income, then you will have your consolidated balance sheets, then your shareholders equity, your statement of shareholders equity, and finally your statement of cash flows. So take a couple of minutes, no rush there. I have some time. I hope we all have some time here. Help me or just comment on the chat box as to what you would look at, where would you start, what would you look at, and where would you end in a very logical and structured manner. And the numbers are in front of you, so you can use those numbers, right? So let's get started with that little exercise. So anyone who has any comments? Broadly put, Apple generated $394 billion of revenue in the financial year 2022, over 100 billion in net income.
Lalit, we have responses in the chat
Yes.
box.
So we'll look at revenue. Okay, great. EPS, all right. EBITDA as per Indian standards. Okay. What else? Top line, bottom line, that is revenue and net profit. Okay. Suri, thank you. Shweta, thank you. Arif, and thank you, Ardeep. NOPAT, okay. Vishal says NOPAT. Balance sheet, Shrisa says balance sheet. Debt, Arif says debt. Pritha says we look at financial statement and ratios. Trailing 12 months, Shweta says ROC, return on capital employed, cash flow statement, variance analysis, Vishal says. Perfect. That's what I was expecting actually. Thank you. Great. Free cash flow, Sunil says. ROE, return on equity, billing. Okay, Anil says billing. Okay. I'll just wait for a couple more to, see the investment of the company. Someone says anonymously. Okay. Okay, couple more maybe. Companies with moats. Okay, what exactly is that? Anywho, the point I'm trying to make here is assets and liabilities and so on and so forth. Yeah. So the point I'm trying to make here is, see, within this group, you see there are different aspects people would look at, right? Someone says, okay, start with the revenue, start with the income statement. Someone says, start with the balance sheet. Someone says, start with the cash flow statement. Someone says, go to the, the ratios right away. Someone says, look at the variance and all, budget side of it as an insider. Someone says EPS, right? Investment activity and so on and so forth, right? So the idea is, see, what happens is, in finance, there isn't much theory, right? Finance is something which is created by professionals. When I did something right, Prateek copied and started to do that, right? When Prateek did that, someone else, and slowly and gradually the academia, the academics, starting from CFA Institute and colleges around the world, they started to give some theory. Except for the modern portfolio theory created by Professor Harry Markowitz back in the day in 50s, Professor Sharp-Renner and all of that, we don't have much actually. And that's why we don't have a concrete tool to say, okay, this is how we can logically and, in a very structured manner, we can analyze the financial statements of our company. All right. So this is where I would like to demonstrate something. So I also obviously found that problem when my students, when I'm teaching that, I would want a structured approach, though everything and anything under the sun is important for you, right? So for instance, on 5th of May, at 2:30 in the morning, Apple, as per Indian time, because it was 5 o'clock as per the Eastern time, So our students went on to attend the earnings call, right? Why? Because obviously that is also important. Annual report is past data. You also want to look at the real world developments. You want to see, okay, there's a development that Apple has collaborated with Goldman Sachs to offer a savings account to its Apple Money customers or Apple Wallet customers, paying 4.15% interest, which nobody is paying in the US. And they collected more than $1 billion in 4 days, right? So in order to solve the problem, and at this, as I said, this demonstrates our teaching philosophy, our way of life, I ended up creating something called a counter analysis, right? The idea is very simple, and it's funny when we really understand it. If you find it funny because it's that simple. When you want to perform a financial analysis, when you want to comment on the financial performance of any organization, and finance is, as we understand, management of money, just keep an eye on the money and track it. I'll come to that. I haven't even showed you, Shweta. Yes, counter analysis is built by me and contributed by our program head, Shiva Gurunathan Bavamala. The trick is very simple. Keep an eye on the money, right? If it is a new company, then also okay, this is where the money is coming from, and just track where the money is going. Or in an old or mature company like Apple also, you do the same. So basically, money enters in an organization through the capital structure, right? I'm starting a clothes business today. The first thing I need is the money, right? I need to decide my capital structure. How much debt, how much equity. Why it is important? Because that determines my cost of capital. That determines my weighted average cost of capital, and that determines my risk as well. How risky, how solvent, and how liquid I would be. That's gonna determine that. There are some questions I'll hold on to. Applicability of this, is it in our job profiles or for our individual stock analysis? So I don't teach individual stock analysis. There are a number of ways to do that. Different people do it different way. What I'm saying is, if you find yourself in the role of a financial analyst someday, or you are an entrepreneur and you want to understand your own financial performance, there could be a logical and structured way to do that. That's the point I'm trying to make here. All right. So when you try to keep an eye on where the money is coming from, you know that it first enters the capital structure. I'll decide, right, whether I want to take a loan from Prateek or I want to issue shares or whatever, right? And the very next obvious step is, where does that money go to? That money goes to create an asset base, right? You will buy a machine. If you're running a pant company, you create pants, you want to buy a machine, you want to keep some inventory, you want to keep some cash, and so on. So the very next decision, and these are the decision any corporate finance professional or a CFO would take. First decision would be, if you were hired as Apple CFO on the starting date of the financial year, that's the first thing you would look at, right? Or you would decide for any company, how much capital I need and what should be the sources of that capital. And then the second decision would be how to deploy that in the real asset base. How much cash, how much inventory, how much machine, and so on and so forth. Because this asset base is the platform on which you will create revenues. Revenues do not start on day one, unless you're a trader, maybe, right? I just buy from here and sell there. Probably you can start in a couple of days. But apart from that, jumping onto income statement and revenue is basically not a great idea, because that is not where the game is starting from. The game is starting from the capital structure. Then the second decision is the asset base. The asset base will determine, so the machine, how many pants it can create in a year and how great those pants are, will determine your operating performance. Your revenue, then your gross margins, then your operating margins, then your net margins, and also the associated cash flows. The operating cash flows, the financing cash flows, and the investing cash flows. Though investing and financing cash flows is a different game altogether. That depends on your strategy. And one thing which nobody will teach you, and nobody would even bother to see, because historically, companies always struggle for the funds. Companies always struggle for money, and the CFO's job maximum or majorly becomes a glorified accountant's role, right? All he has to do is to make sure that every month he's able to bring 20 lakh rupees from some bank, some overdraft facility from the money market, and run the show for 15 days before he collects the money from his customers. But with organizations like Apple, who had $190 billion in cash and cash equivalents at the beginning of the financial year, they have to invest that cash somewhere and generate returns from there. When the Silicon Valley Bank crashed, the size of the balance sheet or the assets was $211 billion. It was a bank. a full-fledged proper bank. Apple had $190 billion in cash, equivalents, and short-term marketable securities at the beginning of the year, right? So that means the non-operating performance and the risk performance is equally important. By just looking at the revenue and the income statement, you wouldn't even know what the mess Apple created last year, which will show in a while. And finally, your retention, how much you retained, how much you paid back, how much you put back in the organization, how much you paid out as dividends, buybacks, and how your price performance. People talked about EPS and all, right? So all of that finds a place here. The dividends raised based on the performance and everything. How did your EPS behave and the market price of the share behave? So CAONR, counter analysis. Initially, it was called the LF analysis, but I thought, it doesn't suit me to use my own name for a tool like this. And here, ladies and gentlemen, I present to you and to the world something called the counter analysis, where I would, or you would, learn more by looking at pictures and graphs rather than by looking at numbers. This is the state of affairs with Apple during the financial year 2021. Just have a look and then we'll zoom it and we'll focus on all these verticals one by one. So as I said, it all starts with the capital structure, right? So the first column you see is the beginning of the year and the second column is obviously how they ended the year. Now, at the beginning of the year itself, Apple had a very, very uniquely looking capital structure with very high debt. You may think Apple is a profitable company. They had a net profit of $100 billion during last year, but they still had, at the beginning of the year, they had almost $125 billion in debt on which they were paying interest. And only $63.1 billion in total equity, giving me a DE ratio, debt to equity ratio of greater than 2. Apart from that, there are obviously two sources of capital, right? You borrow. I go to Pratik, who's a bank manager. I borrow from him, or I issue bonds, or I sell shares. But there is always a third source, free source of money, which is your working capital liabilities. If I can convince Mahima to give me the cloth to make the pants for 2 months, that's free money. She'll not give me cash, but she'll give me the inventory that I need. That will save my cash. That's cash for me, right? They had 102 billions of that and $61 billion with a total capital structure of close to $351 billion, right? This is how they started the year. Yes, Shrisa. So the good thing is after I'm done, and this is not just the front or the dashboard. You can use this model to analyze any organization. All you have to do is to provide the inputs in terms of income statements, balance sheet, and it'll do a lot for you. It'll do what you cannot just do with the bare eyes, right? So the team will, yes, you can get it from the team. So that's not a worry. Let's enjoy the process first, right? Rather than worrying about it, let's enjoy the journey. Feel free to communicate with me, during this if you have questions and all. And this is what I'm talking about. See, you guys said ratio, dekho, EPS, this and that. There was no structure to it. In today's era where ChatGPT is taking over jobs, right? Finance professionals, specifically consulting guys like me, I worked with EY. So my career is basically, I started with EY, 6 years, 13 days in EY, across assurance advisory. Last was mergers and acquisition, was helping European and American companies buy and sell their, assets or whole organizations. Then obviously I have been a part of both academic and financial consulting after I quit EY in 2014. And the idea is, as of today, and at least in the consulting business, the knowledge business, where knowledge plus money creates more money, you have to be a storyteller. Go to a CFO, you go to a client. Imagine you meet Luca Maestri, the CFO of Apple, and you just randomly throw things at him. Ratio this and ratio that. This is not called anything in general, Akshay. This is something we have created, and we are calling it counter analysis. This is our build. This is our proprietary thing. This is built by me, and of course contributed by Shiv. Right? So that's where I started the discussion. No, there are no theories. You go find, in finance books, you go to CFA curriculum because that's a gold standard, right? You wouldn't find any logical structural tool. Everyone would say, okay, let's perform a D ratio. Let's perform a ratio analysis. Let's do this and that and blah, 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 but no structured thought. So $351 billion worth of capital came through these sources. Now, you may want to perform a ratio analysis here, but it's a great idea to put that in the story itself. Let's see with this capital structure, how did Apple perform on, see, the very basic question for me is, if I see a capital structure, how's the health of that capital structure, right? In order to do that, I'll just rely on the conventional ratios, which you all understand. I've looked at few leverage ratios, I've looked at few coverage ratios and few liquidity ratios. And rather than putting numbers here, I've put in a color code because human brain is more aware of the changes in colors and shapes rather than numbers. After 5-7 numbers stop making sense to you. If you're talking in billions and billions, it'll stop talking sense to you. Now, just tell me, looking at leverage, I'll comment on it. And of course, when you use this model, you will go to the section where we have elaborated on leverage, right? And you will see I've used the traditional ratios, no? Debt to asset, debt to capital. Anyone can calculate. You can find it anywhere, debt to equity, financial leverage. And I've put that in for 10 years and provided a color code in here. So just by looking at it, without looking at numbers, what do you think? What is happening? Yeah. So based on color itself, yeah. If you want to see the color, you'll go to that relevant tab later. But just by looking at the color coding, what do you think? The performance is improved or from left to right from 2013 to 22, or it has gone down? Anyone? Oh, went down. Yes, right. It's going bad. Though in absolute terms, it's still great, it's still great. But relative terms, performance has gone down in terms of leverage, in terms of coverage, interest coverage ratio, debt service coverage ratios, and a couple others. And in terms of liquidity also. The cash ratios, the current ratios. Yeah, left is 2013 and the rightmost is 2022 10-year analysis, right? Here, for some reason, and I have not put in cost of debt in beta and WACC. Why? Because my analysts, my students are working on that right now as we speak, because that's a matter of very deep dive. You have to spend hours and hours and hours before you make any comment on it, right? However, and what I ask my student to do, to treat it as their own for their own companies. So someone is working on Amazon, someone is working in Microsoft, someone is working on Tata, and the analyst comment which you get to do in Goldman Sachs and JP and EY, you put it here. Whatever you think about, whatever qualitative insights that come out of it, this is high leverage and dwindling coverage and liquidity. The show is played on very high leverage. That's what is apparent just by looking at this graph and not even looking at the numbers per se. Though, as I said, the model provides you all the details about all the numbers. You can go there and see, look at the numbers itself. So the game started with $351 million on 25th of September 2022. And the next decision you have to take, think like a CFO now, think like the companies that you will create. Once you have got the company, the next decision is where to invest it. The real asset base, the assets that you control and use to create revenues and profitability. So this is what Apple did. And this is really, really interesting, guys. Out of $351 billion, Apple had $190 billion in cash, equivalents, and marketable securities. Cash is cash, hard cash. Obviously, they wouldn't keep that much of hard cash. Cash equivalents is any financial security, any investment that's maturing within 3 months. And marketable securities is anything which is maturing within 365 days. They had $191 billion of that and only $160 billion of non-cash assets, majorly 40 billion, close to 40 billion worth of property, plant and equipment. Only out of $351 billion, you may think Apple has large plants across the world and this and that. No, they had only $40 billion in that because they are asking others to manufacture for them, no, Megatron and the Foxconn and all the likes. Working capital asset, your inventory, your debtors and all of it was 47 billion. So very first question is, why the hell a product company, a tech company needs to hold this much of cash? This gets highlighted, right? So, and as an analyst, you have to find answers not just in numbers, but beyond numbers. You have to go to earnings call, you have to talk to the management or get any insight, and also look at the state of the economy. If you look at Amazon today, if you look at Uber, you look at, Twitter for that matter, you look at Amazon, you look at all the FAANG companies, Facebook, which is now Meta, Amazon, Apple, Netflix, Google, which is now Alphabet, and any other company across North America, Europe, they all are showing this pattern. Why? They're all bracing for recession. If you're expecting a recession to come, what you'll do, you'll hold on to cash. That's right apparent here. Okay. And when I'm looking at the asset base, there are very important questions, right? I should ask that how exactly these assets were utilized. Was it efficient? Was it not efficient? Right? So there again, the conventional ratios, and you can create your own ratios, by the way. Always believe in creating something, always believe in innovating. Total asset turnover, you see what's happening. Just look at the color code, what's happening. Non-cash asset turnover, it's missing. Don't worry about it. Fixed asset turnover, it went down during the middle years, slightly improved towards 22 and 21. Cash conversion cycle and operating cycle. Operating cycle is how many days between inventory you sell it and collect cash. And cash conversion cycle is when you pay for the inventory and when the inventory comes back. What's happening on that front? Apple is all green on that. By the way, that's very interesting. Let's go to the conversion cycles. That's a very important metric for any organization. You see, Apple has a negative cash conversion cycle. Apple has a negative cash conversion cycle in 2022 and all throughout the 10 years. In 2013, they had a negative cash conversion cycle close to 44 days. And by 2022, it increased to, it increased to 63 days. What does it mean? It means Apple first gets the money from sales, uses that money for 63 days, and then it pays to the suppliers. Because the days payable outstanding is very high at 98 days. Right? So that's efficiency, I would say. For the company, they are doing good. For the suppliers, they are harassing, but for the company, they are doing well. And then comes the concept of creating things for your own. Right? Yes, Srisha, that makes sense, right? Creating own ratios. Thank you, Tanumoy. I created a ratio called cash to non-cash asset ratio. When I compared Apple's cash assets to non-cash assets, I found the number to be 1.19. And my analysis says any company who is doing more than one is not a company, it's a bank. Which is my prediction based on this ratio. And by now, everyone knows Apple is now a fintech company. It's not just a product company or a tech company. It's a fintech company signing with Goldman Sachs and letting Goldman Sachs collect money from their people and issuing all the kinds of things, So Apple is a neobank. We use the term neobank. And my prediction said that you can calculate it for 10 years. You would see after 14, 15, 16, you would have predicted that it is a bank. You don't know it yet, but it is a bank. And see, I think by now the news is in public domain that it is actually a neobank. That's what I'm talking about. And there is nothing. No, I just did a simple division, but there's a lot of thought that went into it that my claim should be substantiated. And this is basically pure advisory business. In advisory, you cannot see in advisory, there is work done for $30 an hour and there is work done for $3,000 an hour. Any boutique firm based in Mumbai would be happy doing work for you for $20, $30 an hour. And organizations like EY would charge you as much as $3,000, $5,000 an hour. When I quit EY back in the day, 2014, my charge rate was $300 an hour. And I was just a kid there, basically, just a senior, not even a top level manager or something like that. Right? So what's happening here? Lean operating cycle, as you can see, operating cycle is very small. Negative cash conversion cycle. It's a dream for any business. If you can run a business with a negative cash conversion cycle, you don't have to invest even a single rupee in your working capital. That's a dream, right? That's a dream for every entrepreneur, right from the Chole Bhature shop in your vicinity to something as big as Apple or something else for that matter. Positive net difference of days payables over days receivables underpins working capital sufficiency, or they are a bully, basically. They're a bully. Big companies like Apple, Nike, they are bullies, right? And pivot around Apple as a service. And Goldman Sachs also says the same. I'm sorry for the horrible state of my desktop, but that's what happens when you just save things here and there. The term used as Apple as a service is also used by, obviously I was influenced by a GS analyst, but that is exactly my analysis also, Apple as a service. It's not a product company. If you are following it for a while, if you understand it well, and as I said, even before the number games begin, there is a lot that you need to understand. Apple purely wants to outsource the manufacturing to the three major players. They have Foxconn, Megatron, and there's one more. And they just want to focus on designing stuff and selling. There are more than 2 billion active iPhones in the world. The installed user base has crossed $2 billion. I think it crossed by November, December last year. Imagine the kind of things that could be done on that. Once you enter the Apple cage, you never leave. I'm an Apple user myself for 10 years or so. right? You use Apple Arcade, you use Apple Money, you use Apple TV, go to their app store, you pay 30%, you pay and they charge 30%. So purely service, because that is where the high margins are, right? While the product margins are closer to 30-35%, the service margins are 70%. That is the game Apple wants to play. It's a service company and it is a neo bank, right? So this is how the capital that entered $351 billion were invested in real assets. And this is how the capital health looks like. And this is how the efficiency of using turnover, using assets look like. And then you go to, and this asset base creates a revenue for you, no? If you are selling pants, you need that machine which serves as a platform on which you create revenues and profitability. And if you look at that, which we call as operating financial performance or financial performance, $394 billion in revenues, $171 billion in gross profit, $119 billion in operating income or operating profit, or as you call it, EBIT, earnings before interest and tax. No PAX or non-operating expenses, they were balanced. They had $125 billion in debt on which they were paying interest, but they also had $125 billion in debt and $190 billion in assets, financial assets, which were generating interest for them. So they sort of balanced it out, though it's not a great performance, I would say. So despite having $125 billion on the balance sheet, the non-operating expense charge on the income statement was only 300 million. It's just a rounding error for a company like Apple, generating $100 billion for them in net income. It's more than the GDP of several countries combined. $100 billion in net income at a margin of close to 25%, right? And how did that translate into cash flows? Healthy cash flows. Out of $100 billion of net income, they generated $122 billion in operating cash flows. The cash flows which come out of your day-to-day operating activities. And how did they use it? They put back what they depreciated. The depreciation was close to $11 billion during the year. They put it back to keep the same efficiency. They bought $10 million more of cash equivalents and marketable securities. But what they did with their shareholders, they paid their shareholders total of $105 billion during last year. Imagine that, $105 billion hard cash went to shareholders' pocket. How? $15 billion in dividend and $90 billion in share buyback. Look at the share price of Apple and how exactly it is, making all the kind of noises. And here, obviously, along with it, what I want to do, I want to check my health of my margins. Gross is improving. EBITDA I missed here. EBIT is improving. Net is improving. Return on capital invested and return on equity. Apple has a return on equity of 175%. Unheard of. It's exponential. It's exorbitant. 175% return on equity. So what's happening? What my analysis says there, services margin sustaining the gross margin. Product is not that great, but yeah, service margin is improving. And as they sell more services, one iPhone guy who paid 70, if he spent 20,000 or 10,000 services during the year, that's what happens. That's what they want to do. Leverage induced high ROE. ROE is because of high leverage, and it's not because of anything else. Actually, consistently high operating cash flow underpins capex and equity reward. So the game is simple. Be a cash cow. It's a mature company. It's an old company. It's a cash cow. Cash cow is who pays a lot of cash to their shareholders. Apple is behaving like a cash cow. Now, guys, very interesting point here. It all appears hunky and dory so far, right? Apple is great. Oh my God, Apple. But most of the financial analysis stops there. Maximum financial analysis, they stop at the income statement and cash flow statement. And that misses the bigger picture where it's not just the glorified accountant, but it's actually the CFO's role. $190 billion were invested, no? That was invested in some other companies' bonds, in some government bonds, in some mortgage-backed securities, and so on and so forth. So what happened on that? That if Prateek is my CFO, at the beginning, I gave him $351 billion. He kept 190 in cash, 160 in other assets. And now please understand, revenue and profitability is not just CFO's performance. It's CEO's performance, it's CMO's performance, marketing officer, it's COO's performance, who has improved the cash conversion cycle and the other things, right? It's not just CFO's performance, but CFO's performance gets highlighted where? Across capital health, of course, but another place which everyone else misses. And that is where the actual game, the comprehensive game comes to comes into picture. Now look at the non-operating and risk performance. Apple bloody lost $14 billion on their investments last year. The $190 billion that was invested, the interest rate changed in the US, all of a sudden we are looking at 5.5% Fed rate rather than close to 0% Fed rate. They bled like anything. And this raises very significant question on their risk management abilities and their non-operating performance. They lost $1.7 billion on US Treasury stock. These are all unrealized losses, but a loss is a loss. Anyone who understands finance, for them, a loss is a loss. They lost $700 million on US agency securities, $1.2 billion on non-US government securities, and $7.7 billion on corporate debt. Other companies' bonds they bought, and close to $2.6 billion on asset-backed securities and mortgage-backed securities. Now, I would give zero to Apple on all these fronts. Why I would give Apple zero on all these fronts? Let me show you. Okay. If I want to understand Apple's performance, obviously I want to know what the management's plans were for the year. Right? Now here you have the annual report. And if you look at the annual report, it was said that the investment philosophy had to be capital preservation. It's mentioned somewhere. Let's just preservation. Yes. The company's investment policy and strategy are focused on the preservation of capital and supporting the liquidity requirements. Now, my question is, why the hell did you invest in MBS? Why the hell did you invest in ABS? Because that's derivative or structured products, right? They brought in the 2008 financial crisis, the subprime crisis. Why the hell were you doing that? Why the hell were you investing in non-US government debt? And how the hell were you sleeping? This $14 billion of loss did not happen overnight. Were you sleeping? And that's the problem. The new gen risk managers, there's a huge opportunity in risk management also, because they're bloody losing money. Be it SVB, be it your Credit Suisse, be it your Signature Bank, be it anyone, they're all behaving like this. $14 billion. What's the use of having such a high margin of $100 billion in net income when your CFO or your investment manager lost you $14 billion during the year? So here my analyst looks at the interest rate risk. Of course, the company is talking about that. They performed a sensitivity analysis here, and they tell you if the yield curve changes by a 1% or 100 basis point, the company would have lost $4 billion. That's the risk on the interest rate front. The Forex risk, they lost. Now let me take you to the one of the most important, financial statements we often tend to ignore, which is statement of comprehensive income. Here, all the items which bypass the income statement by accounting standards, as mandated by accounting standards, they find a place here. They lost $1.5 billion on currency translation. When I sell a phone in China, I'm in US, when I sell a phone in China or Zimbabwe or Brazil for that matter, what happens to the currency exchange rate also determines how much money I take. And they lost $1.5 billion in there, but they also were able to generate $3.2 billion on the derivatives they used to hedge it. So I think that is okay. That performance was fine. You did not really lose anything. You are expected to lose money on foreign exchange, and that's why you put derivative hedges in place, right? But apart from that, when you look at the cash position here, you see it was all in red. Total of $14 billion worth of unrealized losses on their available for sale securities during the financial year 2020. That's not a great performance. Apart from that, Apple has a lot of exposure in a lot of places. There is, being a lawyer, I tend to very seriously look at the legal risk. They had a litigation going on with Epic Games, which claims that Apple is actually violating fair market or fair competition norms by forcing the people to use Apple payment mechanisms and taking a cut of 30%. Imagine if it goes in against Apple. It is slowly, there are some adverse judgments, but if someday it is decided that Apple can do that, the services margin will fall down. So no matter how carefully you calculated the share price in your equity research report, if you failed to take that risk into consideration, you are gone. You're gone. Your analysis is gone. Your money is gone. And any other risk that you can talk about as an analyst, once you go deeper, that's what my students do and put in here. So I would say risk management failure upon abrupt yield curve shift, substandard risk management in violation of the investment policy statement, They were long. They bought asset-backed securities, mortgage-backed securities, and corporate debt. That doesn't make sense to me. Total of 14 billion loss on available for sale securities. That piece of analysis everyone misses. Non-operating performance and risk performance is equally inherent to the analysis of the financial performance. And finally, from here, how exactly the market, what did you do in terms of now you have cash, how much you retained, how much you paid out, and how did your share price perform, right? Capex, as I said, was almost equal to depreciation. Whatever they depreciated, they put that back. Dividend was 15 billion, 90 billion worth of equity buyback, putting $105 billion in the hands of the shareholders. And this is a stock price on the 4 quarters ending Q1, Q2, Q3, and Q4, or the year ending financial year 2022. You see, there was some hit there for sure. Now, this also helps you understand. So this serves as a unique map to understand the field of finance. This is finance in front of you. All these aspects are finance and probably a little more than finance. And this is also the career map for you. You have a career here in capital structure. There is capital structure advisory. You can work in corporate finance, helping companies determine their best capital structure, or you can be an advisor, external advisor like me, helping companies structure and restructure their capital structures. That's a unique job or a unique career opportunity right there. You can be a consultant, a generic consultant, or even a management consultant. There's a very fine line between financial consultant and management consultant, where you are helping companies improving their conversion ratios or their turnover ratios, helping them build their strategies, how to go about whether to lease the asset, whether to buy the asset, or where to look at to improve that performance. Or you can work inside the CFO's office, within the finance controller's office, within the corporate finance team, where you are running, or you are also responsible for the operating performance, the margins, right? What happened on those performance. And obviously the non-operating, you can be an investment manager, as you might have realized here so Apple themselves, they tell us the company uses a combination of internal and external management, investment managers, to execute the investment strategy to achieve the objectives. So you could be working inside Apple, investing and managing their $190 billion, or you could be an investment firm outside who would pitch to Apple that let us manage your money. And also you could work in risk advisory, managing this risk along the way, or consulting for some company to manage this risk along the way. And finally, helping companies take the retention and the payout decisions, because that also has a bearing on the overall game. And the price finally is equity research. The world needs people who can tell, okay, this is where Apple share price is going and why. You can also come up with 150-page worth of argument to say, okay, this is why this has happened. Okay, so the counter analysis, obviously we have a limited time here. I would love to go in the details, which you would, by the way, when you get your hands in this model. There are input cells, as you understand. There are calculation cells. Just put your inputs, 10 years worth of data, and everything else the model does for you. And this way, visualization is a better tool for human brain. By looking at numbers, if I just look at numbers, they'll stop making sense to me after a couple of numbers. When I perform the first step, that is data visualization, starts to talk to me. I can see how exactly the performance. You see the revenue from services, how it is following a linear upward path, while there are oscillations in the revenue from the sales of the product. You can look at the cost behavior, how the margins are going, and this and that. You can analyze the balance sheet in the same manner, the capital structure, the asset base, the current assets, and right away you start to find the questions, the areas of probing. So for example, if you just look at this, you see total non-current liabilities are coming down and current liabilities are going up. That's a probing area for me. Will it cause any liquidity challenge for the company in the future? Can it cause a problem for the solvency? In terms of non-current assets, you can see what's happening here. Marketable securities dominated by marketable securities. In terms of current assets, what's happening? This is happening. You can analyze the cash flow statement in a similar manner. And profitability, everything is visualized. Everything is something which gives you a path to go forward. We also have a DuPont analysis here, which breaks down the ROE. Why ROE is so high? Because of only one reason, that their leverage has increased from 1.58 in 2013 to 6.18 in 2022. Liquidity and solvency, coverage, activity, turnover, and my most favorite, common size analysis, where I look at everything as a percent of sales or as a percentage of total assets, depending on whether I'm looking at the income statement or am I looking at the balance sheet. So the areas of probing are totally apparent. If you look at the image, it tells you more than any number or any income statement can tell. Right. So going back, and here I'll open, I'm sure you have many questions or points to make. So first I'll look at the chat box. Creating own ratios. Yeah, I gave you a couple examples. I have many other ratios, probably not in this corner analysis, but elsewhere. Very surprising. Yes, Shrisa, that's correct. And if you go home and you use the same website, no, sec.gov, which I gave you the link for, sec.gov. Look at the US based companies. Right now, there is very unique stories that's happening there. You click on company filings and you just click on this, let's say Amazon. Go to Amazon. 10K is the annual report. That's a format used in the US, and 10Q is the quarterly report. Look at the 10K and you start to analyze what Amazon is doing. Why I'm asking you to focus on big companies, Fortune 500 or the Sensex 30 companies in India, because if you find something credible in a $20 million company, it doesn't make any noise. What I'm focusing on, why I'm making my students go on calls and creating these things and putting it on LinkedIn and in their portfolios, this is unconventional career transformation. If you find something very credible about Amazon or Apple or something and you predicted it and it turned out to be true, there are people watching. You connect with people in your industry. You add to their LinkedIn's. You send it to them. Sir, I've performed this analysis. Can you comment on it? If I am there and I find one such analysis prepared by a student who is still in class, I'm not going to ask for your resume. I'm going to ask you how much. Salary kitna loge, discuss kar le. Frankly, but there are no salary promises. I'm a teacher. I don't promise salary anything. It depends on your commitment first, right? So yeah, the game is in the North America, they are bracing for the recession and everyone is holding on to cash. Apart from that, for Apple, I predicted they're going to be a bank. They look like a bank. If it walks like a duck, if it quacks like a duck, if it looks like a duck, it is a duck. So Apple, it is a new bank. It is a new age bank, which is challenging the old banks, by the way, right? So yes, very surprising. Well, it will be difficult for me, Abhay. All we did was a comprehensive financial analysis. Feel free to review the video, probably. A link to Apple's balance sheet. I think, yeah, someone has already given to you. That's cool. What's the best path of education or credentials to be a consultant? Great question, Sweta. Two things, curiosity and innovation. This tool was not available for the world till I created it. As of today, it's here. As I said, in consulting, counter is capital structure, asset base, operating performance, non-operating risk performance and retention, and payout and price performance. The first letters from all the 5 verticals that we had a look at. That's counter. So best path is be curious, look at everything and anything. Right. I'll like to show you something that would need. So let me stop sharing for a minute because I need to open my email. Right. And I'll show you that how I help my students achieve that. So let me open couple of things that I share with the class on a daily basis. Yeah, you can see this. So this is an email. So see, no program could do something for you unless you do things for yourself. So how I want you guys to transform your careers, be it consulting, be it trading, be it anything. Be curious, be innovative, and learn from anywhere and everywhere. CFA will give you some tools. I'm a charter holder myself. It's not necessary to pursue CFA, though it is the end. At CFA, it stops. There's no more finance beyond that. I'm writing a paper. I'm going to submit it to the CFAI journal because that's my alma mater. And please increase kilometer range. Sorry, what's that? I didn't get it. Yeah. And I'm going to publish it in the journal, and I hope it is added to CFA level 1 someday, hopefully within a year. That would be my endeavor, right? So you have to be curious. So this morning, now look at this. This is not really numbers, but let's say you were trying to predict the future of Zomato or Swiggy. You would have found that unless you understand that there is an initiative called ONDC, Open Network for Digital Commerce, you wouldn't be able to perform a great equity analysis or any other analysis of Zomato because you don't even know the game is changing. Now, from duopoly, Swiggy and Zomato, 2 major players, we are entering into a perfect competition model. ONDC could bring Zomato and Swiggy to their knees. They are charging half as what Swiggy and Zomato charges. Right now, there are a lot of money coming in. They're providing discounts and all. So these are the kinds. So what I focus on is unconventional career transformation. Not key, okay, my resume, someone will take it, some career services team, something will take it. You create the noise for yourself. Now you build your own brand and the world will come to you. Like Amir Khan said, don't run after success, run after excellence. When you do that, success comes to you at any cost. No matter what, success will come to you. So be curious, look around. Just going through a daily newspaper like an ET could give you a great food for thought. You may not understand everything right away. Just learn one more thing. Just one thing. So let's say you did not understand, okay, what oligopoly is. Just Google. We are living in information age. Finding answers is not the problem. The problem is we don't know what the question is. Just learn one new thing a day, anything related to finance and economics. In 30 to 50 days, you will see, oh my God, I know this, I know this, I know this, I know this, I know this. After that, newspapers will also be repeating the same thing because you would have understood most of it. And you will feel the confidence, you will feel the sophistication in your conversation, in your discourse. So be it consulting, be it advisory, be it risk management, be it trading, anything and everything. It's a curious mind. It's an analytical mind. It's a mind that always runs at a speed of light and always tries to find answers to questions. That's the only way. Courses, programs can give you a structured path to go there. It helps you avoid the failure that others may have gone through. Again, it helps you expedite a little, but eventually it depends on your commitment only. Okay. So counter full form is done. I mean, what kind of education? CFA could be a great way. Again, I'm a charter holder, so I love what they did to me, but eventually you are the best judge of that. What is a single parameter on which investment? If you are an investor and if you are taking a decision on a single parameter, you are bound to go down. There is no single parameter on which you can take a decision. Frankly, so best education, Shweta, as I said, you can go with traditional courses, you can go with new age courses, but eventually you will have to be curious and you will have to be a generalist first before being a specialist. A consultant, see, a financial analyst is an analyst first before being a financial analyst. An analyst means a generalist who understands, okay, what is the impact of Foreign Minister or External Affairs Minister Jaishankar's speech on relationship between India and Europe, because that will impact the exchange rate, that will impact the trade, that will impact the GDP, that will impact the per capita, and that will impact the financial markets. You should know, oh, if there's a warning for El Nino or La Nina this year in Indian Ocean, what impact can it have on Indian agriculture, and what impact can it have on the rains, and what impact can it have on the overall state of affairs in the country. So you have to be a generalist and be a specialist at the same time. There's no single path. Again, as I said, I'm not gonna pitch the product as a panacea to you, Ramban to you. The product, the program, any program would do well if you also commit to it and work simultaneously. Right? In the coming future, how much data scientists can impact traditional financial analyst work? Doesn't really matter. You will evolve. As of today, as a finance guy, you also need to start looking at tech slowly and gradually. Fintech, as we are calling it, Web 3.0, the blockchain-based disruption that has come in finance, you have to understand slowly and gradually start to understand that as well. Structure gives you tools to think creative too. Yes, that's a nice one. Top-down approach. Yes, exactly, Shweta. So as I said, everything is either natural science, social science, economic science, or applied science. If you start to look at that, like that structure, because in order to predict a company's future, you have to predict the country's future. You have to predict the society's future. Now, if there is a civil war, or if there is something, there is some disruption, there is some insurgency in a country, you haven't taken that into consideration, all your projections are going to go bad. You cannot say, oh, this company is going to be 5 times or share price is going to be 200 times. You cannot really do that. So that's what I'm trying to say. Curiosity will take you where nothing else can take you. Commitment will take you where nothing else can take you. Of course, we have a fine program here at Wired with best of the faculties from 5 continents, which Pratik will talk about, of course. But again, as a faculty, I have to draw that Chinese wall really well, that I wouldn't pitch my own product or my program, but this is what I'm doing. I'm here to demonstrate what we do inside the class. We think like a EY guy, we think like a GS guy, we think like a Barclays guy, we think like a trader, we think like a risk manager, we think like a equity researcher, we think like a consultant like me. Okay, so this is a demonstration of our teaching philosophy and teaching pedagogy. So these kind of things we continue to do. So that's just one email that I showed you. I can show you one more. Let me show you one more, the kind of things that we do and how exactly we try to make sure that our students are walking hand in hand with us, apart from what we are doing in the class itself. Let me show you just one thing. Probably, let me just search for it, right? Very difficult for me. Yes, perfect. Yes. So another example of how we connect classroom learning with the real world. So you understand there's a company called Bed Bath and Beyond, right? It has filed for bankruptcy protection under Chapter 11 in the US. So as soon as a development happens, we try to connect it with the class and try to provoke the thoughts of our students, provide them whatever they need to, and give them assignments related to the real world development and all of it to make sure that they're walking hand in hand with the real world and not just any traditional and outdated teaching content or teaching methodology. We are not an outdated teaching content company. Right. So going back and trying to answer as many questions I can, and in 5 minutes, I'll hand it over to Prateek. Well, Vishal, not just a trader. I'm not a trader. I don't do day trading, of course, but I run a virtual fund. I run a virtual advisory company for my students, and I run a virtual fund. I don't take money from the market, but I do interesting things in interesting ways. Well, Shrisa, degree is something which opens the door for you. Virtual as in, yeah, virtual as in it's all over the internet. It's all, through the virtual presence, not real in as in I don't open an office and there is no receptionist or nothing. That's what I mean by virtual. Okay. Yeah. Degrees just open doors for you. As I used to say, or I still say, a degree can give you a placement, not a promotion. Beyond that, it's your brain, what exactly you are doing on a daily basis. But yeah, a degree, a structured approach, a program could be a pathway towards that, right? So now I'm going back to the questions that were no, Shweta, not registered. I don't need to register it. Now I'm not accepting money from anywhere. No, it's just my money and few people who really love me and trust me, little bit from them. Why? Just to keep it professional. No, I don't do it otherwise. Okay, now there are some question for unlisted companies. How does one gather all the information? No, it will be difficult. You can go to MCA, but not all the information will be provided because they are not legally bound to provide that. Contractual liabilities, yes, very important. Shri Krishna, somewhere I have. I think I've mentioned somewhere on some last version maybe. Also taken into consideration the I think that tab is probably here somewhere where we are also looking at, yes, Apple has to pay somewhere around $100 billion in committed liabilities or unconditional liabilities next year. But understand that is that is something part of the game, but that is yet to happen. You should keep an eye on it. That's an interesting point, of course, right? You have to know what the company would earn and how much it has to pay. For Apple, it has a commitment of closer to $100 billion. Why? Because the companies that are manufacturing for them, they need commitments in advance, right? So of course, you will keep an eye on it. Potential liabilities or contingent liabilities, if you're talking about, of course, that's where I'm talking about the legal risk and all the risks, no? You add to it. So the last thing that I want to talk about it is, this is open source human intelligence. My students are not just allowed, but required or requested to add something to it and add their name to the analysis and make some noise in them. In the classroom itself, you created something. So now, Sri Krishna, you mentioned something. If you were a part of my program, I would request you to go deeper there, work with me and see if we can add something to the model and attach your name. That's the point. No, I'm not getting into accounting, Shri Krishna. No, there's a difference. There's a line where accounting ends and the financial analysis begins. Though under risk analysis, you can, of course, think about SOX compliance and all of it, right? Yes. Banking to financial analyst. Yes, of course. I would let my learning consultants take that in one-to-one. Apple is a negative working capital, no cash conversion cycle days, which means it already had a float. Now it's actually taking deposit from the user, which means even greater float. Do you think it'll get into lending? It has already started to get into lending. Nah, there's already Apple Money and Apple Wallet. You can buy now and pay later. Already doing that. Anonymous, please answer the question. Which question did I miss? Did I miss any question? There's some anonymous attendee who says, please answer the question. What question?
I think they can type in again.
Yeah, please type in again. How do we get an entry-level job in valuation industry? Would love to know that. I'm qualified chartered accountant. Do I need additional qualification? Well, that's, I think, something to be discussed in detail. I wouldn't be able to do justice to that in 2 minutes. So, Pratha, let our learning consultants get in touch with you to counsel you on that. Follow your classes. Can you give any guidelines? Search me on YouTube. There are a couple of things there. I think I'll start to write in public domain, though so far I don't write in public domain because I'm happy within my classes. But Dr. Paul, your comment actually provoked my thoughts. I'll do something. I'll reach out to you. Just search for my name in a week or two. I'll share my thoughts with the world now after out of the class also. Gap of 3+ years can do this course. Again, this is for our learning consultants to take care of. Can I go back to Kaunor? It's not Kaunor, it's Kaunor. Yeah, I'm there. Dr. Paul, yes, you can also get into touch with our learning consultant if you need to, get something more from me. We can figure it out how we can deal with that. It is good to invest in unlisted companies like Care Insurance, Retail, Reliance Basement Fee number given. Well, this is not investment advice right now, so I'll not answer that, or I'll defer it for you to provoke think upon it. Okay, and any last questions here? Okay, so regarding questions, of course, we have learning consultants who are experts on counseling you, experts on talking to you. I'll stop here because we have to adhere to a deadline. I'm so sorry for that. I would have loved to I can talk for like 3 months straight on this, looking at not just Apple, but all the FAANG companies, and start to write and start to tease them. Okay, you're not doing this well, and go to their earnings call and have fun with the CEOs and the CFOs. But unfortunately, we have a deadline. So first of all, thank you so much once again for everyone who joined on this workday and stayed till the end. I hope it was a good use of your time. I promise you will get this model. Feel free to use it for your own analysis and everything. Feel free to write to me. You can always get some contact details where you can send me your suggestions or your thoughts on it, whatever. And someday I would love to see someone, take it a level forward. Whether you become my student or not, doesn't really matter. I am in education because I really believe that education is the only way to transform lives and transform economies and transform nations, right? I was having a great career with EY, 5 promotion, 6 years, but I haven't given up on it. No, now I'm a partner in my own firm. I'm a legal financial financial forensic consultant, and of course an educator, because that's something I love to do. So yeah, dream big. My message for you would be dream big, believe in yourself, have bigger goals. When you aim for the stars, you at least end up on the moon. Prateek will share with you how exactly you can get your hands on this model and everything. And if there are any question about the program careers, Prateek and the gang will be able to take great care of it. So thank you so much. Thank you so much. It's a pleasure, always a pleasure to be a part of such discussions, open some thoughts or the other, provoke some thoughts or the other. So thank you, Arif. Thank you, Tanumoy. Thank you, Vishal. And thank you, everyone, all the 70 odd people who are here. And over to you now, Prateek. Take care, everyone. I'll take your lead.
Thanks a lot.
Cheers.
Thanks.
Take care. Goodbye.
So I think definitely the session was really, really insightful. A lot of understanding about the financial analysis aspects and how you can, build upon the expertise into these areas. Talking about the financial analysis, as Lalit directly said, that it's important not only to understand about the analysis aspect, but also to see into the risk management, the litigation, and all those aspects as well, because the future could be uncertain, and it's important for a finance professional to predict the same. So definitely a lot of people talked about how we can get into this kind of education, how we can get a structured approach to get into these kind of roles. So we definitely have built a very, very, I would say, comprehensive program which talks about all these aspects that you have studied or maybe listened to, the risk management aspect, the financial analysis aspect, the equity research aspect, and the trading aspects, like be it into the bonds, be it into the derivatives, or be it into the the equities. So as a finance professional, if you want to become a bond trader or maybe an equity research analyst or even a financial analyst, you need to have the entire understanding of whatever the practical skills that Lalit has just talked about, right? You need to have that expertise, you need to have that understanding. And for that matter, the program that Hero Wired has in collaboration with Columbia edX University is really a great choice, I would say. Right, I'm not sure whether you have seen the program in the past or not, but definitely I'll just give you a glimpse of what we definitely teach into the program and the kind of career outcomes that you could expect once you complete the program. So this is the program, guys, I'm talking about, which is the certificate program in financial analysis, valuations, and risk management. So which is definitely one of the placement assured program, which means that we definitely help you with the relevant career outcomes which you were talking about. When discussing with that how I can get into these kind of job roles and profiles. So this program is a collaboration with edX Columbia University. Again, Columbia University, one of the renowned universities, one of the top universities for finance professionals, right? See, it's a R1 status university. R1 means a research oriented university, one of the oldest universities of the world. And the curriculum that you guys study in this program is designed with and curated by Columbia University. And definitely the industry experts, they have also added certain modules into the program, which gives you the practical exposure, the practical skill sets, right? So definitely that is what is being catered to. And you have already seen by an example, like how it happens in the live interactive session, how a thought process and a perspective is being built, is being made, by a candidate into the program, right? So yes, it's also this program, if I talk about, focuses on certain roles such as a financial analyst, such as a risk manager, a risk analyst, an equity research analyst, as we discussed, or even a credit analyst. So these are the roles, or so you can work into the corporate finance, be it a financial analyst or be it a financial consultant. So these are the kind of roles you can target post completion of the program. And definitely you can also work into the treasury side, where actually as a person you provide customized solution to the HNI clients, to the corporate clients, how they can invest their money, how they can hedge their risk, right? So definitely that is what also we cater to in this program. So yes, it's a 6 month program, right? It's a comprehensive program that will integrate all these aspects that we are talking about. The sessions will happen live and interactive, and this happens on the weekends, the Saturdays and Sundays. So you don't need to get your work schedule impacted. You can attend these sessions on Saturdays and Sundays with the faculties, which includes Mr. Lalit Fulara itself and a few more who are actually from the different continents of the world, right? So it's a 6 months program, and you get the deep industry connects. You get a lot of hand holding in terms of the projects, the assignments, and the mini projects as well. So it's all about giving you the practical skill set, the practical exposure, as we discussed. It's all about making you connect to a real business problem as and when it arises in the economy, and then you implement those concepts on that real business problem, you under the guidance of the faculties, obviously, and then you understand how to navigate into such kind of the projects or business problems. And this really helps in terms of getting those opportunities with the recruiters as well, because that is simply the thing that they are wanting to understand, right, from a candidate, whether how industry ready the candidate is. So this is what we were talking about in terms of the job assurance aspect, that minimum 8 to 10 guaranteed job opportunities is what we provide to a candidate. We focus on the technical skill sets. We focus on the soft skill aspect. We focus on your digital presence, revamping your CV, revamping your LinkedIn profiles, including these projects, whatever you have done into the CVs and LinkedIn profiles, and then helping you with the mock interviews, the interview preparation that we talk about. So the faculties take a lot of sessions. They help you understand what kind of questions can be asked in the interview, how you answer these questions, right? And then actually you go for the interviews. So that one onus that lies on your shoulder, or responsibility that lies on your shoulder, is to crack that interview for us. And definitely, as Lalit already said, it's very important to put in that time and commitment into the program. Then only we can expect a certain outcome from the program, right? So as I said, like 12 to 15 hours is the kind of commitment that we are seeking from a candidate if he wants to enter into this program, right? So when I say 12 to 15 hours, it's 7 to 8 hours on the weekends, because you have 3 to 4 hours of live classes on Saturdays and Sundays both. And apart from that, probably 1 to 1.5 hour on a daily basis, maybe doing your projects, your assignments, and your case studies and everything, right? So that is what we do. Plus, definitely you get one-to-one career coaching, the career mentoring with the best of the industry experts. They guide you on how you can build a specific career, and step-by-step approach there in every month. What is it that you need to do? How aligned you are with the career outcome that you are seeking, because we also take your careers assessment test, that which means that how you are going ahead. Are you really into the job role, or still there is some gap which needs to be bridged? So that is definitely what we take care of. And not only this, in terms of job assurance, once you have done a program with Hero Wired, you also become a lifetime alumni of Hero Wired, which means we have that onus, that responsibility. We connect you to the We Rise placement portal. Let's say you have done a job for 6 months or a year, and if you find that I want to change the job now, or maybe any XYZ reasons, so you don't need to go anywhere else. You can come back to Hero Wire and access this We Rise portal, where we will help you with these job roles and these opportunities, right? So we also cater to one of the NISM certifications. So we train you conceptually, give you that entire understanding, and help you with registering for one of the NISM certifications, which is obviously conducted by NISM, but we help you with the conceptual understanding around the same. So it could be, a certification which is in line with the career outcome that you are seeking. So, be it something into mutual funds, be it something into portfolio management, so on and so forth. So you can choose that. In terms of the eligibility, definitely a bachelor's degree is required for this kind of a program. You need to have a strong background in high school mathematics, and recommended work experience is 0 to 5 years, right? But then if someone is working into traditional finance, wanting a rewarding career in the modern finance roles, which we have already talked about, so definitely that is possible. And the learning consultants, they can discuss with you one-to-one what is your current background, current profile, and how you can excel into these job roles. So that is definitely doable. In terms of the curriculum, I think Lalit and I have already talked about the what are the things that we are covering. So I'll just give you a brief overview, like the bond market and valuations is what we definitely cover into the program. We cover the forex trading market, how you deal into the forex and all those stuff. And we also cover the credit market, right? The entire credit analysis, credit rankings, understanding the credit worthiness, all these aspects is definitely what we talk about. Then we do cater to the trading in the derivatives market, where you understand about the futures, the forwards, the options, and the hedging applications, right? So all these things is definitely what we covered. And we also talk about corporate finance, where Lalit has, Lalit gives you that expertise. You get into the financial analysis aspects, understanding actually the financial feasibility of a project. All these aspects is definitely what you understand. How you do it practically, that is really, really important. which is what we teach into the program, right? And then we definitely, take care of the interpretation of the financial statements. So you have seen live in this webinar how that interpretation was done, making you understand the entire profitability and liquidity aspects of Apple, and then talking about the risk management, risk aspect as well, right? So definitely the cash flows, the DCF, the FCF techniques is what we cover into the program. And then we do talk about the risk and return and the risk management aspect. So, the CAPM model, the weighted average cost of capital, and then the relationship between, all these aspects is what we cover into the program. One of the important outcome is also an equity research, role, where you talk about the price of a stock, why it is valued, and then maybe if it's overvalued or undervalued. And you also have that skills into report writing, where you write the equity research reports, and you can recommend whether someone should buy a stock, sell a stock, or maybe hold a stock. So those kind of recommendations is also what you can provide to the client, right? So that is also what we take care of in the program. There are certain financial regulations as well that we cover into the program, and then that depends on the role as well, what role you are wanting to get into. So FRTB, Basel III norms, all these aspects is what we definitely cover into the program. And then we do have some technological aspects, because as a finance professional, you need to really have that edge. Maybe you have the conceptual understanding, but what Lalit has demonstrated in the form of dashboards, in the form of graphs, and all these aspects, the data you can obviously easily remember when it's in the pictorial form. That's where the importance of SQL, Power BI, all these aspects comes into the picture. So advanced Excel, Visual Basics, macros, Power BI, and all these aspects makes things easy and convenient for a finance profession, and that is also what we cater to, right? So we teach you all these aspects, and then definitely there are capstone projects, as I said, mini projects and capstone projects to make your hands dirty and really want you to work on these projects, and so that you get that relevant skills, and you are able to talk about these aspects with an interviewer, in the interviews, right? So you can only talk about it when you have practically done it. Otherwise, it's not possible for you to talk about it more than 5 minutes, right? So these are the kind of industry projects where we have. So helping you with the understanding about the liquidity of the providers, how they can finance the working capital needs. In one of the projects, we have a portfolio. We want you to build a portfolio management tool and also a decision making framework. So how that portfolio will be consistent with the objective of all the stakeholders, right? So these kind of projects is definitely what we cover, into this program. So we also have projects with stocks, money control, all the Motilal Oswal. So these kind of industry relevant projects, right, is also what we cater to into the program. Talking about the industry expert, as Lalit has clearly mentioned, that we have people into the program who are coming from different continents. So we have one of the learned faculties, Mr. Sivakumar Bhavamala, and who also helped, who also collaborated in this model Apple study which Lalit did. So he's a BTech in aerospace engineering from IIT Madras, and then did his postgraduate diploma in management from IIM Bangalore. So he has worked for approximately 16 years, out of which 9 years was into Barclays Capital, United Kingdom, as a credit trader. So basically, he's a UK citizen, and he teaches you a lot of things: bond trading, credit trade, credit analysis, and all these aspects into this program. So then we also have Mr. Lalit Fulara, and then he has already talked about his profile, so I'll not spend time on that. We also have Mr. Frederick Miller, who is an MBA from University of British Columbia. He has done his he actually had been a director, at head of regulatory management at Bank of America Merrill Lynch, right? So and he has also been a director of market risk engineering at Barclays Capital, having an extensive experience of approximately 30 plus years into the industry. So these are the kind of people whom you get associated with. You talk to them live, you understand from them how the things work in the finance world and how you can make a career there. What are the skills that you need to be ready with, right? So they guide you in and out during these 6 months, right? So we have some other faculties as well who assist, in this program. One of the important faculties we have is Mr. Satyam Arora. He has approximately 14 plus years of experience in strategy, mergers and acquisitions, all things that he has been head for strategy and mergers and acquisition at Philips Netherlands, right? So these are the, and he has been into equity research roles. So these are the kind of people you interact with and you learn these aspects from them, right? So in terms of learning hours, I have already told you, like, yes, it's a 6 month program, so 12 to 15 hours is what you really need to spend into the program, all right? So in terms of batch demographics, people want to understand that who are the kind of people that come to the program. So let me tell you, the cohort includes, people like area credit head, head of operations, senior consultants, marketing managers, the group company secretaries, CFO advisory people, and then branch managers, right? So 40% of the people come from the range of 0 to 2 years of experience, but then 60% of the people come from the range of 2 to 15 years of experience. And yes, these are the learners. They have worked at Bank of America, HSBC, Deloitte, Infosys, all these kind of companies. They have already worked with. So certain testimonials given by the faculty, the learners who are already there. And I would also want to help you, understand that we have got our people placed into these relevant profiles, and we have got them successfully placed in, the investment bank, majorly like Goldman Sachs, JP Morgan, and also, the treasury management roles in ICICI Bank and places like such. So definitely, it requires a lot of effort. It requires you to put in that time commitment, and if you have that time commitment, if you have that curiosity, so definitely you can easily take that transition, right? So yeah, I think this was what I wanted to cover, maybe regarding the program. And if there are any questions, I'll definitely take this up. So yeah, so I think we have a few questions in the chat box. Um, we know a case study. Okay, so I think you're asking about a case study or a capstone project. All right, and you want the brochure. Yeah, so definitely that can be shared, and the people, the learning consultants will definitely get in touch with you. So in terms of case studies, I'll just give you an example that, let's say if you want to become an equity research analyst, it's very important for you to not only understand the fundamental analysis, the technical analysis aspect, the market analysis, the competitor analysis. Understanding this is one aspect of it, but then when you go to a recruiter for an interview, they will definitely ask you, like, have you prepared an equity research report by yourself? That is the first and the foremost question they would ask. And let's say, what is your analysis about a specific company or a specific industry? Right. So when this kind of thing happens, this is one of the projects that we do into the program, where we first of all, you know, help you go through at least 5 to 10 equity research reports, of the blue chip companies that are listed on the stock exchange. And then we ask you to prepare an equity research report by yourself, right? So when you do that kind of, project, the faculties will grill you on that equity research report just the same way it happens in an interview, right? So they will act like a recruiter and they will grill you on this report for at least 40 to 50 minutes. And then they will help you understand how it would be in a practical scenario. That is where you gain that confidence that, yes, I'll be able to talk about my analysis in the interviews. All right. So I hope that answers your question. Uh, and so I think gap of 3 plus years can do this course. Yes, definitely. I think there's no challenge with the gap as such, until unless you are committed to the course, you are committed to the program. We all know there are no shortcuts to anything. You need to have that commitment. You need to put in that hard work, right? So there are questions regarding the course fee as well. definitely. So we will talk about the course. So basically, the learning consultant will get in touch with you, and they will help you understand the course fees. But just to give you an idea, if the course fee is 2,75,000 plus GST, right? So, but then there will be people who will be making you understand the different aspects to the course fee as well. So, apart from that, okay, there's a question on the timings for the online sessions on the weekends. So online sessions, the timings are usually like, in the more afternoon times or in the evening times. So we have slots, different slots. So one batch has one slot assigned to it. So it could be, let's say, a 2 to 5 kind of a time. It could be a, let's say, 5 to 8 kind of a time, right? That really depends, because we have batch, and that batch contains only, like, 40 to 50 people, in the batch. So we want to give personalized attention to each and every learner, and that is the reason we don't want to keep a high number, of the candidates. So we only have 40 to 50 people in a batch. Right? So timings definitely vary, and then so the sessions, uh, are these sessions recorded? See, these sessions are live and interactive, and once they happen, they get recorded. So you can go and watch the sessions n number of times, even once the class is done, right? And we have specific doubt clearing sessions. Uh, if let's say you are good enough, and you're putting in a lot of hard work and commitments, probably there's a possibility that you can get one-to-one doubt clearing session as well with the faculties, depending on their time and availability also, right? So those things are definitely there, because we want to do the entire handholding till the time you get success in your career. So so I think, um, it's already, the time is completed. So I hope that I was able to answer most of your questions, and definitely, if there is anything that still needs to be answered, maybe you can get in touch with the team. Our learning consultants will get in touch with you, and they will answer the questions.
Thank you so much, Prateek. Thank you so much for helping us with the complete details about the program. Thank you so much, everyone, for being a
Sure.
lovely audience. I hope you all got a lot of answers to your questions, and Lalit was successful in providing his theory to you. And in case you still have any questions or queries regarding the program or the theory that Lalit shared, our team will be reaching out to you. They will be personally helping you out in order to get the theory as well. You can use it and you can apply it as well. So we'll be making sure that each and every one of you get the theory, and we'll be helping you out with more details if you would like to have them. Thank you so much, everyone, for being a lovely audience. It was amazing to have Prateek on this webinar. Thank you so much for helping
Sure.
us with all the program details.
Thanks a lot. Thanks a lot to everyone. Thanks.
Good evening, everyone. We'll see you again with an exciting webinar. Thank you so much for joining us today. Bye-bye.
Bye.